happy Thursday. Welcome to the closing beat. We've got a class coming up for our customers tonight, so we changed the set a little bit to get ready for that. Hey, we're financial advisors here at Jazz Wealth. Just a quick show that we do called the closing beat to go over the stock market and everything for the day, to let you know how things are going. We'll cover all of that. If you're one of our customers, tonight is sort of our year-end review 2020 outlook class that we're going to do. We are going to focus on a lot of geeky stats, man. I just got a lot going on there, so I hope you'll join us for that. If you're one of our customers, it'll just be live in the dojo. You'll just go right in there. It'll pop right up just like we always do. So happy to... I can't wait. I got a lot of geeky stuff to share with you, so we'll do that. For everybody else, let's go over the stock markets here today. You got the Dow higher by 136. You got the S&P adding 14 and 59 on the NASDAQ. We'll go over to the charts here and take a look. The S&P, the sort of media headline today is we broke above the 3,200 area for the first time, closing out here around 3,212. So a real strong day overall for the S&P. The whole impeachment thing didn't matter. And we kind of talked about that throughout the week, that nobody really cares as far as the markets go. You may have political bias or whatever side you're on, doesn't matter. But as far as the stock market goes, nobody really cared. Stock market moved higher. Got a little bit of a boost throughout the day. From Treasury Secretary Steve Mnuchin said that the USMCA deal should add about 0.5% to GDP. That's a big number considering we're at 1.2%, so the market sort of grabbed onto that a little bit. We also have this sort of slow melt up going on. You do know that stock markets go down, right? They will go down. There will be some nasty days out there. So if you're just getting started in the markets, no, you're not that good, and it's not going to continue forever. The markets will pull back a little bit, even if not for the rest of the year, but we'll see. So the NASDAQ higher as well, hitting new record highs also. And then you got the Dow hitting new highs also. Looking pretty good there. So overall, a pretty good day in terms of the overall stock market. Jobless claims came out today. A little bit weaker than expected. Well, not a little weaker than expected. They pulled back from last sort of reports. We had that big last week move where initial jobless claims spiked. They broke out of an entire huge range today, or last week. This week they pulled back here just a little bit. Not looking too bad here in the short term. I think from what I read, at least initially, a lot of analysts were looking for this sucker to pull back even more and try to erase kind of everything going on there. So I don't know. I just want to point it out to you so you can see what's going on there. Got an interesting little study we'll start off with, and then we'll wrap up some other cool stuff as well. There's a study, I believe it's done by AAII. They did asset allocation study. So the average investor, where do they have their money? Stocks, bonds, cash, where are they currently invested? Well, they show that currently the average investor has 67% in stocks. That's up 2.5%. So they got some money moving into the old stock market there. 18.7% in bonds and 14.3% in cash. Interestingly, I thought the cash position for the average investor has been reduced by about 2.7%. What does that tell you? People chasing this market. Come on, the individual investor's like, hey, I got some cash. I thought the markets were going to pull back. It didn't, so they're diving in at these highs. We'll see if that's a good decision or not. So just thought I'd share that with you. Let's do the old sector breakdown here and go from there. You got communication services hitting new highs today, adding basically 1% on the day. That's largely because of the Facebook reversal that we talked about yesterday. It broke out of these little range, this is the FTC news there where it sold off for a couple days. Basically, Barron's came out and said, don't worry about it. Just buy the stock. All is good. Deutsche Bank raised their price target to 270. And so that's still Facebook sort of riding the coattails of that good news from them, which has helped the communication services sector. So hitting new fresh highs there as well. The oil exploration sort of subcategory of the market, another good day, 1.25% there, hitting back to these prior highs. So that's really aggressively coming off lows. You got a little bit of bottom picking going on there, which I know some of you are pretty happy with. That's okay. Your best performing area today was REITs. So yesterday we talked about that reversal, the fact that it was fighting. It was trying not to make new lows. Well, people saw that apparently, and today another gain. That was the best performing area of the market today. Right smack at 1%, looking good. That relative strength from yesterday, clearly the hint as to the bounce today. I like it. You got home builders down just a little bit on the day. Existing home sales came in weak. Now, this home builder ETF that I share with you every day, now this is a mix. This is home builders and like Home Depot, the supplier, Sherwin-Williams, things like that. So it's a little bit of a hodgepodge of the overall industry. If you want to look at individual home builders and only just a pure home builder play, that'd be the ITB. These are strictly the home builders, but I like to use the XHB to kind of see the industry as a whole, not just the builders, but those that supply them and things like that. It could be washing machines, things that go into new homes. Anyways, that was a little bit lower on the day. Existing home sales, like I said, came in. It was a little bit weaker than expected. Look, there's just rising prices and less supply, right? So it makes it tougher for people to dive in on that the old house purchasing market there. I think you have some people going on the sidelines as well. It's very similar to the stock market, right? They see prices going higher and they say, well, I'll sit back and wait. I think you see a little bit of that in the home sale area. Anyways, you got tech stocks, about 0.75% on the day there. So interestingly, the tech sector is now 23% of the S&P 500. So that is by far the greatest sector in the in the S&P. So in terms of weighting, like what percentage of the S&P is tech, that's 23%. That is the largest. The 30-year average weighting is 16%. So tech from like 1990 all the way to now has just really come flying full steam ahead. Was averaging 16% weighting. Now we're at 23%. It's also the most overvalued area of the market as well. We covered that the other day. The best sector this year that has gained the most market share of the S&P 500 or has increased its weight the most in the S&P 500 is tech. Sorry, I wrote that down wrong. So tech actually adding 2.84% this year to its 20+% weighting there. So tech by far, as you could say, as tech goes, so goes the market. We usually say as tech and financials go, so goes the market. But anyways, the biggest loser of market share this year was healthcare. They lost 1.29% of the overall, but they're still the second heaviest sector in the S&P at 14.1%. So financials and healthcare rank in there right as a close second to each other. So XLV also hitting a new high today. That's a healthcare ETF if you like looking at that sort of thing. And that's basically our sector update. There wasn't a whole lot else to grab onto today. Sort of quiet. You had some random, sort of news out there. Mexico pulling back. We've been talking about that, pushing the new highs off the USMCA deal. And so that's just pulling back a little bit. Regional banks continue to pull back a little bit. Nothing too big there. And financials, also a little bit of a pullback. Didn't really play along today in the overall stock market. Let's look at some individual stocks. You got Micron Technologies. Did you see it? I love this, man. This is so cool. So first of all, it gets an upgrade from Wedbush yesterday. Before earnings come out, they said they raised their price target. They think earnings were going to be good. Very rare, but that was a good call. That guy nailed it there. We saw that the stock was gapping up after hours, and we say, you know what? When that stock gaps up, if it does, that's a textbook short trade for the short traders out there. If you look at the way the market started today, here's a 5-minute chart. I'll just zoom in so you can see. So the stock gapped up just as we saw yesterday, and what happened? It sold off to start the day. That's a textbook trade there. Got a chance to point that out to you yesterday if you got to watch. Really cool. When you know what people are going to do, that's a very helpful thing. Well, anyways, Micron higher by 2.8% today. The CEO said this is a bottom in the memory chip space, so that helped out some of the other memory stocks like NVIDIA, adding 2.5% on the day. And was it Western Digital? Western Digital should have done well today. Yeah, 2.7%, also had a good day. So looking pretty good there. Not too bad. What else do we have here? Oh, Netflix. Netflix broke above the 200-day moving average today. We're happy to see that. We happen to own that stock here. Looking pretty good. So no real resistance from the 200-day moving average, which is the red line there. But now consider the move that it's had in such a short amount of time. If you look at Netflix and you go, okay, well, look, it's moved basically a rough estimate here. It's about 13% from lows to highs. How often does Netflix move 13% in one fell swoop and then continue for another 10% or something like that? It's not very common, so I'm just letting you know. Stocks like these, they do get a little extended. That's totally okay. Nobody minds if it pulls back a little bit. ConAgra, this was pretty exciting today. We happen to own this in a couple of our funds. This at highs today, not where it closed, but actually where it closed as well. So today, ConAgra has the best one-day performance that it's had in over 44 years. So awesome. If you own the stock or happen to be invested here with us, that's pretty cool. Best day, 16% gain on the day. So here's the takeaway from this. Remember yesterday we were talking about General Mills. I gave you a little bit of an overview of how these big guys like this, organic sales is the big focus. Everybody just looks at organic sales. And I try to point that out when it's like Netflix. We all know they look at subscriber growth. Every company has its own metric that people like to follow. For example, Nike after hours here, gross margins. That's always a big one there. So that hurt Nike after hours. But staying on track, yeah, General Mills yesterday, organic sales of 1%. That's not bad, but it's not great. Right? These are behemoths, right? So a 1% net growth in organic sales is big. Well, when you have something like ConAgra report the very next day from General Mills, people get to compare. It's in their mind recently. They go, okay, General Mills 1%. What'd ConAgra do? They're kind of in the same thing. Got a bunch of different brands in there. What did they do? 1.6%. So unbelievable organic sales, organic growth there. And the, excuse me, the CEO said, they expect the growth to continue. So very positive comments out of the CEO. That sort of lets you go, General Mills, ConAgra, if I had to choose one, we got some good stuff over here. This is not bad, but this is pretty good too. And you're able to compare that sooner. That's why these stocks have bigger moves like that when they report sort of back to back and it's faster to compare. Had they been a month apart for some reason, you might have forgot what happened over here. It wouldn't be as exciting, but that's kind of the gist of ConAgra today. So really good day. It breaks it out of a big range there. So likely going to stay in the focus here for a while for a lot of investors there. A couple notes from the CEO, just coming across that I happen to see. Expect growth to continue. I covered that. Snacks and frozen foods. They expect that to be one of their more popular areas. Snacks being like their popcorn brands. And yeah, so good for them. All right, looking good for ConAgra there. All right, let's see what else you got here. Rite Aid. Big gap higher today, 42%. That's going to be at the top of any radar, any scanner that you have there. We don't own this one, but it's a great beat on earnings. It's the best earnings report in 5 years in terms of beating on earnings, so looking good there. These guys are the third largest drugstore, so when they, when something changes there, that's going to get a little attention. They basically focused on the prescription area, right? Higher prescription counts. They were able to keep their costs low. These guys are a bit of a machine when it comes to keeping their costs down. And that's going to be important because if you remember, was it 2 quarters ago, they got rid, just like all the other Walgreens and everybody else, they got rid of e-cigarettes and the vaping stuff. So that's going to maybe hurt a little bit, but in the meantime, everybody's excited there. And so we'll see. So far, keeping costs down and getting a lot more in terms of prescriptions, looking good for them. All right, let's move on here. 76.4% of the S&P 500 is above the 50-day moving average. No change. That's exactly the same as it was yesterday. So really no change there despite the good move here in the markets. You got 39 new 52-week highs today. I bet you can guess which one's the best leader. ConAgra. That'd be your best performer out of the S&P 50-day moving 52-week highs today. You had a lot of semiconductors in there just because of the Micron Technologies. AMD hit the highs there. We talked about NVIDIA already. Lam Research was one of them, I believe. Yep, Lam Research in there. And then, of course, Micron with their earnings as well. Probably Skyworks. SWKS is the ticker symbol. Yeah, this continues to be on a tear there. And probably Qorvo. There we go. Qorvo, yep, also hitting new highs as well. Not bad. Yep, so looking good there. A couple of the others I want to point out to you, some of the breakouts, the FTNT we've been pointing out for the last couple of days, looking good. Leidos also moving higher as well. That's the breakout from yesterday. So good strength on some of these breakouts. It's also a good favorable market for things like this. Sempra Energy was the other one that broke out of this little range. It's just I don't know, it's kind of like if you're going to fly a plane and you need to get to Vegas and there's a great tailwind, which is weird, wouldn't go that way. Let's say you're going from Vegas to Minnesota or something, and there happens to be a really strong tailwind. You get yourself up in the jet stream there. It's just helpful. You're going to get there sooner. It's the same thing with these breakout plays. If you can play breakouts in strong markets, then, of course, you have that tailwind. Was that a horrible reference or what? You can tell what I'm thinking about today. Airplanes. Best Buy was your best performing retailer that hit new 52-week highs as well. And I point that out just to give you a few more there because there's really no 52-week lows. Everything's very much strong there. So that's what we have there. Hey, tomorrow we got GDP numbers coming out. This is going to be like the first time they start to get into the headlines and stay in the headlines. So GDP numbers, I'll just point it out. Let's see if we can go over here real quick. There's this concern that maybe GDP is softening. If we go over here, zoom out, I'm going to go back 10 years real quick. Let's go as far as we can. Yeah. So here's GDP looking back as far as I can. It's back into the 50s there. And you've got a concern here that in the ultra short term, you got a little downtrend starting. GDP unable to really get up and going. If you follow or pay attention to this sort of thing, you know where we're coming from here. So can we go up higher? Get you guys to see all of it? There you go. The concern here is that, look, if we start posting sub 2% numbers, that's going to get people thinking recession into the new year. And we'll see. We've got the numbers coming out tomorrow. And then, of course, next year is going to be a big focus as well with Boeing now cutting production there. And what's the USMCA deal going to be? I mean, is it really going to add 0.5%? How long until we see the effects of that, if anything? It's a long-term thing, but that's what you got there. Okay, I want to share a stat with you here real quick, just because we're going to cover some of this later tonight for our customers. We've got, if you look at the S&P 500, 1928, first year you have. If you ever use the data and you want to go back that far, it's as far as you can go, 1928 till now. If you take every single year and you go, what was the biggest drop in every single year? Just go back. Just keep going all the way. Financial crisis, 56%. Go all the way back to 1928, biggest drop in 28. Biggest drop in 29, biggest drop in 30, et cetera, et cetera. If you go all the way back, you have an average of, in 1 year, an average expectation of 16.3% to the downside, meaning at some point you expect to see plus, a decline of around 16%. That would be the average as a long-term investor. Of course, each year can be a little bit different, and this year is a great example because this year we did not even come close to that. Right? This entire year, we've got a couple weeks left, but basically this entire year, the biggest decline we had was 6.84%. What does that tell you? That it's pretty impressive, really. Think of all the headlines that we had this year, all the opportunities, the trade wars, the fights between Mexico, the Fed cutting rates, and oh my gosh, is it going to be a recession, the inverted yield curve. Think of everything that happened. And yet the biggest to the downside we could do is 6.84%. Some of you are going to look at that and go, well, that's a strong market right there. Others are going to look at that as a warning sign. So we'll be sure to cover a little bit more of that here tonight as to what to expect, if that helps you. All right, couple questions here, or I'll do a few more things and I'll take your questions. Boeing's credit rating downgraded a notch by Moody's today. I forget, it was like P2 or something. I forget what it was. More importantly, the Secure Act has made its way to the president's desk. It's in the spending bill, so it's not like separate or anything. But it's in the spending bill, which he has to sign by tomorrow at midnight. It's widely expected that he'll just sign it anyways. But inside the spending bill is the Secure Act, which is, people got, there's some pros and cons there. People don't like that you're going to have wider exposure to annuities. It means a lot of people in their retirement accounts are just going to sort of trip into annuities. It's not for everybody, right? Careful. But some of the good things, you've got the RMDs don't have to start at 70. They'll start at 72. So that's a good thing. You're going to have more flexibility in terms of your 401k plan. If you have a smaller company and you just can't start one, it's not cost effective, you'll be able to sort of piggyback on others. That'll be a big boon for names like Fidelity and Schwab. They'll be all over that. You can just see marketing everywhere for that. And then one negative is they're getting rid of the stretch IRA. Well, sort of. So they're going to make it to where you can't stretch inherited IRA distributions over your lifespan. The longest you'll be able to stretch them out is 10 years. So it's going to make you pay more taxes on inherited IRAs, which is a great reason to start working on getting money post-tax, right? Use the Roth while you can. Keep us in mind if you do. All right, let's move on here. Tomorrow you got CarMax reporting. Carnival Cruise and Winnebago will report earnings. Broadcom ex-dividend today, $3.25 if you happen to own it. You got Live Nation will be joining the S&P 500 next week. Coincidentally, they're settling with the Department of Justice today, I believe, on their little bit of an issue there with how they do ticketing for their events, trying to bully people into Ticketmaster. Match.com, we happen to own that stock. That was a good day for that one there. They're going to split off from IAC, become its own. They're just going to spin off and grow apart from each other. The reason why is because it's a tax-free transaction, by the way. So if you ever get to look into this, it's not just because they're like, oh, well, we'll be over here, you guys be over here. Tax-free puts a ton of money in some of these dudes' pockets. So can't say I wouldn't do the same thing if I happen to have those two companies, but that's the real reason, if that helps you out there. Okay, so that's pretty much all I have. Let's take some questions there before I get in trouble. We'll see what I can do, and we'll wrap this sucker up. Ricardo dove into some Netflix today. All right. Hey, if it pulls back, don't freak out. That's had a great run. I love it. 45 days till a pullback. I'm not sure. Maybe you're talking to somebody else. Let me know if there's a question for me there. Yep. Ashish going to play some leveraged ETFs there. Short-term trading only. Don't invest in those. Don't invest in those. Not for long-term. When the ETF themselves tells you, do not invest in us, only trade us in the short term, that you know that they're just trying to help you out there, right? Because the SEC made them because the fees are ridiculous, but you don't see them. You're like, oh, there's no fee. Well, big deal. There's a big fee. You're going to pay you. Hey, Jason, send an email to support@Jazz Wealth if you want to test out the old Jazz Cash there. Still building it out, working on some cool stuff there, but yeah. Aren't they also taking away the age limit for traditional IRAs? Matthew, if you mean in the Secure Act to contribute, then yes, you're right. Taking the age limit to say you could just keep contributing to it with no issues. That's in there as well. I think that's what you're referring to. Yep. Good catch. Thank you. VGT for a tech ETF. There's a lot of good ones out there. Yep. Always look through them. Of course, look at the holdings. Make sure you're not committing like 40% to one particular stock. Some ETFs can be a little misleading, so just do your homework there. Yep. Tomorrow's expiration date on options. Yeah, in particular, it's called Quadruple Witching Day. It's when it's a couple times a year when almost every option that's available expires on the same date. Creates a lot of volume in there. It doesn't usually create a lot of volatility, but of course, anything's possible. It's just going to be a little bit misleading, and you're going to see moments where the S&P and the NASDAQ, they sort of find whole numbers, like the 3,200 today. They'll sort of find those whole numbers and just kind of stick for a little bit, then go find another number and stick. So if we get a chance, we'll take a look at or someone remind me, we'll take a look at the intraday performance to kind of show those options being adjusted throughout the day there. Pretty cool. Jeez. Hey, his question is, will this market ever pull back? I just think the year is over. I said it on Monday. The year's basically over. There's no Fed. Although they've been talking, there's no Fed. There's really no news. Everybody's focused in politics land on the impeachment and what that means. It's like the most highly searched term in the last couple days. There's just not much to go on. Earnings are light. CarMax, Carnival, those aren't market movers tomorrow. So it just kind of seems like the year's over. You know, little pullback, little rally from here. Nothing major you would expect going into the rest of the year. So we'll see. Robinhood fined. Did they get fined? I don't know. I don't follow that there. If they did, maybe it's new or something. Very normal for brokerage firms to get fined, by the way. If you can actually look this up. You can look up TD Ameritrade and just see dozens of pages of all the fines they pay. You know, brokerage firms actually keep cash reserves purely to pay fines, not because they're bad. It's just because it's impossible to perfectly follow the rules. There's billions of rules out there. And so as they grow and things happen or they acquire other companies, yeah, they make mistakes. And a lot of times it's something silly where like one of the customer service people accidentally sent an email from their personal email to a client. That's not allowed. And so there's little fines for that. It's sort of fascinating to see how much money they pay for the silliest little mistakes. Doesn't mean they're bad, but yeah, if there is a fine for Robinhood, chances are it's not their first, and I promise you it's not going to be their last. Just as part of the business. It's really, really unfortunate. It's kind of a backwards business there, how they have to do that. But like I said earlier, I'll stop talking before I get in trouble because I want nothing but good things for brokerage firms out there. I want nobody to pay fines. I want them to invest in technology so that everybody gets the best available to them to make the best decisions. That's where I'm at. I don't mind paying commissions. I don't mind paying fees to brokerage firms and everything. Give me the technology. If you start lacking on the technology, then of course you go, well, I don't want to pay. So that's that one there. But yeah, anyways, so I'll wrap it up there. I hope you have a great rest of your day. We'll see what happens tomorrow. Of course, we'll be here to do it. If you're one of our customers, come join us. Tonight, we'll be live in the dojo for our class. Going to be a bit of a geeky class, so it's your first time joining us. Sorry, don't let it intimidate you. I will stay as long as I have to answer all the questions. I always do. You guys have a great rest of your evening. We'll see you later if you're a customer. And hey, thanks for watching. Appreciate you checking us out. See ya.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.